Hi, this is Ron Janish, and this video is about developing a trading plan using Andrews. Uh, this is what I call an executive trading plan, and I'll fill you in on the components of it. And I always use a real thing rather than something fictitious. Give you an example. One of the important components of a trading plan is to have good risk management. And if you look at there's a video I made on Andrews money management, and then there's a video, it's about 5-10 minutes, and there's another video that comes the next day, which shows you, gee, what happened with those trades, right? And so this was a real thing, and you can actually see what happened there. And I do suggest you go back and take a look at that. But in addition, we're going to talk about developing a trading plan. Okay, so what I think is appropriate, and you can modify this to your heart's content, is to start with what I call a unit level. So for example, let's say a unit is $100,000, which would mean for every $100,000 in an account, you do one position. Okay, or you can have a unit of 50,000 or 10 or 20,000. Whatever number is appropriate, just you need to kind of adjust what we're going to do here to that. So for example, in a $25,000 unit account, let's say, you would have a number of things. Number one, you're looking for long-term. You're looking at long-term positions, so that these are positions that are, let's say, on for days, if not weeks or months. Okay. Here's an example of one right now. And so with Andrews, we wound up going long here, down here somewhere. Let's take a look. Yeah, we wound up going long 1274, which would have been over here. Okay, you can see here, that's where we actually went long. Okay, so, and our target is here. Our initial, one of our targets is here. Now, that's just kind of there as a decoration. Okay, let me explain why. Because one of the things that happens is, in addition to that being a target, there's also something else that's a target, and that I can't really forecast in terms of a specific location, because what we're looking for is a certain pattern. So, for example, Andrews said, well, after a bottom or top or whatever, prices typically go for 5 or more pivots. Okay, that isn't the pattern I look for, but that's a good example of a pattern. So you would be looking for 1, 2, 3, 4, 5, and who knows where that fifth wave might be, right? And it could be in the stratosphere, it could be down here somewhere, who knows? Okay, so we're looking for, this is a longer term trading approach, and we're in this particular situation, we're looking at longer term positions. Okay, all right. Now, let's take a look at another longer term position. And here we go. Okay, so this is one where I'm presently short, but I can tell you that on Monday, which would be over here because today is Friday, we may get another signal, and this others and those of you that are course members can look at this and say, oh, I know what he's doing, and you should. You really should. This is not rocket science. The nice thing about Andrews is it wasn't complicated. I've seen this one guy I call Humpty Dumpty, who, God, claims to have 3 PhDs. I don't know. Uh, uh, and a few other things. But Andrews really was focused on simplicity, okay? And you don't have to make it complicated. It really isn't complicated. So anyway, so we're looking up here in this area here as a potential place for another signal, another selling opportunity. Only this time, in my book, this would be a shorter term selling opportunity. I'm going to tell you why. What I do in my trading plan is I have my longer term signals like I just showed you. Okay, here's another longer term signal. Yeah, here we can see that. Yeah, this is, let me draw this nicely for you. Here's another longer term. Here's our high, low, high. So as you can see, prices made it to the ML here, and this morning prices tried to make it to the ML, made a lower low, and away she goes. And this is what I call Andrews divergence, right? And so in order to trade Andrews, you combine various concepts. And what you'll find is that at a high probability reversal point, several concepts come together. We teach the concepts in the course, and probably the best research that I have is in my expanded course. I have lots of videos that cover all the material in the regular course and in the expanded course, right? So anyway, so this is another longer term, and on this one here, we don't have a forecast, but like I said, we're looking at the pattern stuff, okay? And if we're going to put a D somewhere, let's put a D over here. Okay, and why a D? Well, because that's the place. Okay, okay, so I have a sense of humor. All right. Anyway, it could be up this line here, for all I know. Who knows? But generally speaking, you'll have prices go beyond this point here on its way to a strong upside move, if that's what occurs. So we have longer term positions, and as part of the trading plan, we also have shorter term positions. Now, here's what I do for the shorter term positions. Is I have this wonderful, no, that's not it. Here it is, here it is. See the green and red stuff? Okay, so here you have Australian dollar, Mexican peso, cotton, and the list goes on. And this is short-term. These are short-term signals right here that we see. Greens are winners and reds are losers. And so you can see that not all win. And some of them we don't even bother, like this one here. This is New Zealand dollar. We don't even bother with it. So what I have is I have about let's say 200 intraday signals or trades in a year. Now, as part of the trading plan, now an intraday signal will last between a few hours and a few days. Okay, that's because I'm getting in on an intraday pattern. All right, and it's important that like you look at this here and you say, wow, 23 to 3, 11 to 1, that's a good ratio in winners and losers. The catch is, what I don't have up there is what percentage I threw out at the start because my target wasn't far enough. So if, for example, my D is really close by, when I'm looking at this, going, well, that's really, I don't know if I want to take that because it's just a lot of risk and it winds up being like a risk of 1-to-1, right? Whereas I showed you in the money management thing that a lot of the trades are 4.5-to-1, which is really cool, right? So in terms of reward to risk, right? So one of the things I do is I map out. I do historical studies, and you can do this with a chart, TD Ameritrade data. It's all free, and map it out as to what happened in the last year, right? And so you look at your intraday charts and you do your thing, and this way you have a lot of good practice at it, right? And so now here's the other part that's really cool about my executive trading plan is that I have certain hours when I look for a trade. Now here's how that works. Let's see if I can give a nice example of this. Recent. Okay, let's look at here we go. A whole bunch of lines on here. Let's just ignore them. Okay, let's look at, here's a 1-hour chart. Okay. So what happened was we had a buy signal down here. Okay. And those of you that saw the April 24th video, know what that buy signal was and saw the trade and all that other stuff. This here is, okay. So, see, price came down here and gave me a nice little buying opportunity, and I didn't take it because it wasn't within the time frame that I like to look for trades. And so it came back down here again, and this one was. So this was a lot easier than this one here, because here's why. When you look at these 1-hour charts, you have some signals that occur in the wee hours of the morning when you're sleeping, and that's no fun. So you wait until the morning, and if the money management stuff is okay and target's good and stuff like that, hey, go for it. And so here, go for it. See, this was in the, like 2 o'clock, Anyway, this happened at an unfavorable time. And 1 o'clock in the afternoon. I mean, come on. I'm out doing something else. So I like stuff in the morning personally. And now here's the other part of the executive trading plan. Do you sit there and watch the market all day? I don't think so. That's insane. Okay. You can drive yourself crazy with that stuff. It's just not the way to go. What I generally do is look at the market for about, let's say 5 to 15 minutes once every couple hours. And I might do that 2 to 4 times a day, depending. Now, today is Friday, for example, and even though I had a trade in the Mexican peso this morning that I could have taken, I generally don't take Friday trades. I know it sounds weird, but that's just the way it goes. Let's take a look at the Mexican peso. Yeah, I had a buy this morning, 6M. Yeah. So, yeah, as price went busted up here, we had a nice buy signal. And so now, yeah, so it's got a ways to go. Let's take a look at this on an 8-hour chart. Yeah, it's got a ways to go. We could easily see it go up here, which is a nice exit area. So, so as part of the executive plan, let's go over the essentials. You have your money management. You have your unit size, so you're trading 1 per unit. You have gone through historical study as to what the results are in the various securities you look at, and what we're looking at are all futures. Okay. You have your time of day that you're actually looking at the markets, and you have your time window, but during that time window, you're only really looking at them 15 minutes or so, a few times a day. Okay, so you're not driving yourself nuts, right? That's really it. That's the long and short of it. So now the techniques that I use, that I was talking about here, are all in the expanded course videos. And they're all in there. Just go for it. The thing is, when I make the expanded course videos, I use daily charts as examples. And as you see here, I'm using intraday charts. So for some of my trades. So what time frame you use, whether you use 15-minute, 1 hour, or 3 hour, or 4 hour, 6 hour, that's up to you. Some people like to use so many ticks per bar. You know, so but that's up to you. So and as you can see, the stuff that I use here on the screen, where I show you actual examples of real trades and real this and real that, they're all real and recent charts, not stuff that happened 6 months or 6 years ago. So anyway, I thank you for your time, and all the stuff we use are all in the expanded course videos, which is my research. Okay, because I show you historical studies that we have done with the computer. The computer does the studies, you do the run, and it shows you the numbers, just absolutely amazing on what some of the different results were. And so that's why I use the techniques I use. Anyway, I thank you for your time, and Ron Janish over at andrewscourse.com, signing off.